Conventional wisdom says take your profits and run. That is the fastest way to kill your wealth. Here is why you should never simply sell a property. Most investors treat real estate like a stock trade. They sell high, celebrate the win, and then realize the IRS is taking a massive bite out of their check. That's not investing. That's a wealth lake. The top 1% of real estate moguls don't play that game. They don't cash out. They swap. They use a legal loophole that allows them to grow their empire while paying zero taxes on the growth for decades. Today, we are revealing the 1031 exchange blueprint. I'm going to show you the exact strategy used to trade up into higher performing assets without losing a dime to capital gains tax. If you want to stop leaking money and start building a legacy, this is the most important tax strategy you will ever learn. Let's get into it. Imagine the closing table. You just sold your property for a massive profit. You're staring at that big check, feeling like you've finally made it. But here is the cold, hard truth. That check isn't actually yours. At least not all of it. The government is waiting in the wings. They want their cut. We're talking capital gains tax, depreciation recapture. Depending on your tax bracket, you could be losing 20, 30, or even 40% of your hard-earned equity. Think about that. You spent years managing difficult tenants, dealing with midnight plumbing emergencies, stressing over vacancies, and now in one single afternoon, a huge chunk of that effort is just gone. Perfect. But the real tragedy isn't the tax bill today. It's the opportunity cost tomorrow. When you pay those taxes now, you are removing fuel from your wealth engine. That money is no longer working for you. It is no longer compounding. You didn't just lose money to the IRS. You lost the future millions that capital would have generated if it stayed invested. Most investors fall into this trap because they see the immediate cash. They call it taking profits. In reality, they are amputating their portfolio's growth. Most investors see a massive profit on a property and hit the sell button. They think they've won. But then the tax bill arrives. Depending on your bracket, Uncle Sam takes 15 to 20% of your gain right off the top. That is a wealth killer. There is a better way. A way the ultra-wealthy use to grow their empires without ever paying the taxman. It's called the 1031 exchange. Simply put, a 1031 exchange allows you to sell an investment property and reinvest the proceeds into a like-kind property while deferring all capital gains taxes. You aren't just selling, you're swapping. But here is the catch. You cannot just do this on a whim. The IRS has strict rules. If you mess these up, the tax deferral vanishes. First, you need a qualified intermediary. You cannot touch the money from the sale. If the cash hits your bank account for even 1 second, the 1031 is void. The intermediary holds the funds in escrow. Second, the clock starts ticking the moment you close. You have exactly 45 days to identify your replacement property. Not 46, not 47. If you miss this window, you owe the taxes. Period. Third, you must close on the new property within 180 days of the original sale. Now, why would you go through all this stress? Because of the uptrade strategy. Imagine you have a single-family rental with $200,000 in equity. If you sell normally, you might lose $40,000 to taxes. You're left with $160,000. But with a 1031, you move the full $200,000 into a larger multi-family complex. You now have more doors, higher cash flow, and you didn't give a dime to the government. This creates a compounding effect. You swap a house for a duplex for a fourplex for an apartment building. And here is the God mode of real estate. Swap till you drop. You keep exchanging properties your entire life. When you pass those properties to your heirs, they receive a step up in basis. This means the original capital gains tax you deferred for decades. It's effectively erased. Your heirs start with a new tax basis at the current market value. The tax is gone forever. Of course, managing these deadlines and tracking your cost basis across multiple properties is a nightmare if you're using a spreadsheet. This is why serious investors use professional tax software and portfolio management tools to ensure they never miss a 45-day window. Now, executing a 1031 exchange isn't something you want to wing. One missed deadline and the IRS takes a massive cut of your hard-earned equity. That's why I recommend using professional portfolio management tools to track your timelines. When you automate your tracking, you stop guessing and start scaling. I've seen investors save 6 figures in a single transaction simply by having their data organized before the sale. It turns a stressful tax nightmare into a predictable wealth-building machine. Stop leaving your equity to chance. Click the link in the description to grab the same tax and portfolio tools the pros use. Set up your system today so you can grow your empire without the tax drag.